Welcome back to the channel, everyone. I hope you're doing absolutely great and ready for another important stock market update. If you're interested in semiconductor stocks, artificial intelligence, memory chips, NVIDIA, Micron Technology, and the companies that could potentially benefit from the massive growth of AI infrastructure, then you've definitely come to the right place. Today, we're taking a closer look at Micron Technology, one of the most important memory chip companies in the world, and we're going to examine a very interesting outlook that could have major implications for Micron investors over the next several quarters. We'll talk about memory prices, the expected peak in the current cycle, the potential for Micron stock to move significantly higher, and why some analysts believe the market may already be pricing in too much weakness for Micron after the eventual peak. Before we continue, remember that this video is for educational and informational purposes only and should not be considered financial advice. Always do your own research and consider your own risk tolerance before making any investment decisions. One of the biggest factors investors are watching right now is the direction of DRAM and NAND memory prices. According to Citi, the firm expects both DRAM and NAND prices to continue climbing, which is obviously an important positive signal for companies such as Micron. However, Citi also expects the pace of those gains to slow over the next 4 quarters. In other words, the expectation is not that memory prices are suddenly going to collapse, but rather that the extremely strong pricing environment could gradually become less powerful as the current memory upcycle matures. Citi expects memory prices to peak in the second quarter of next year. That forecast is important because memory pricing has an enormous influence on Micron's financial performance. When memory prices rise strongly while demand remains healthy, companies like Micron can benefit from higher revenue, stronger margins, and significantly improved cash generation. But as pricing growth begins to moderate, investors naturally start asking how long the earnings momentum can continue and whether the current cycle is approaching its later stages. That more cautious outlook reflects concerns that the current memory upcycle could eventually lose some momentum as supply expands and pricing growth moderates. This is one of the most important risks investors need to understand. Semiconductor memory is a cyclical industry, and periods of strong demand can eventually encourage manufacturers to increase production. As additional supply enters the market, the balance between supply and demand can change. When that happens, price growth can slow, margins can come under pressure, and investors can begin looking beyond the current earnings peak toward the next phase of the cycle. This is exactly why the potential peak in memory prices matters so much for Micron. The market is not only trying to determine how much Micron can earn today, investors are also trying to determine what those earnings could look like several quarters from now. At the same time, there is another side to this story that could be extremely important for Micron shareholders. Trivariate Research CEO Adam Parker told CNBC on Friday that Micron, NVIDIA, and other compute-related stocks could trade meaningfully higher over the next 12 months. However, Parker does not expect the group to repeat another explosive rally, like the kind investors may have seen during previous periods of intense AI enthusiasm. Instead, he expects these stocks to advance in a steadier grind. That distinction is important because it suggests that the long-term opportunity may still be intact, even if the market becomes more selective and the pace of gains becomes slower. Parker's view on Micron is particularly interesting because he believes the stock could potentially double by the end of the cycle. His reasoning is based partly on the possibility that investors may already be pricing in too much earnings deterioration after the eventual peak. This is a critical point. In cyclical industries, stock prices often begin reacting to future expectations well before the underlying financial results actually deteriorate. Investors may look at a potential peak in memory pricing and immediately assume that earnings will fall dramatically afterward. But if the actual decline turns out to be less severe than expected, or if the company's underlying financial position has improved substantially during the upcycle, the stock could potentially surprise investors on the upside. That is why Parker believes investors may be looking too closely at Micron's income statement and not paying enough attention to its improving balance sheet. The income statement tells investors how much money the company is generating during a particular period, but the balance sheet provides a broader picture of the company's financial strength, liquidity, and ability to withstand future changes in the business environment. For a highly cyclical semiconductor company, that distinction can be extremely important. A company entering a potential downturn with a stronger financial position can have considerably more flexibility than a company carrying weak finances and heavy obligations. Parker also pointed to Micron's revenue outlook, its high gross margins, and its potential to generate substantial free cash flow over the next several years. These are three areas that investors should pay close attention to because they can help determine whether Micron is becoming structurally stronger rather than simply benefiting from a temporary memory price spike. Strong revenue growth indicates that demand for the company's products remains significant. High gross margins can provide the company with greater profitability and flexibility, and substantial free cash flow can potentially give Micron the resources it needs to invest in future capacity, technology, research and development, and other strategic priorities, while also strengthening its financial position. This becomes especially important when we consider the broader artificial intelligence boom. AI systems require enormous amounts of computing power, but they also require advanced memory. As data centers become more sophisticated and AI workloads become increasingly demanding, memory technology becomes an increasingly important part of the overall infrastructure. That creates an opportunity for memory manufacturers, particularly when demand for high-performance and advanced memory products continues to expand. Micron is therefore not simply a traditional memory company operating in an old-fashioned commodity market. The company is increasingly connected to some of the most important technology trends in the global economy, including AI infrastructure, accelerated computing, and next-generation data centers. However, investors should not ignore the cyclical nature of the industry. Even with strong AI demand, memory pricing can still move through cycles. Supply expansion can eventually change market conditions, and that is why Citi's expectation for slowing price gains over the next 4 quarters deserves attention. If memory prices peak in the second quarter of next year, the market could begin focusing increasingly on what happens afterward. The key question will be whether the next phase represents a severe earnings downturn or simply a normalization from unusually strong conditions. This is where the difference between the stock price and the underlying business becomes extremely important. If investors become excessively pessimistic about Micron's future earnings after the cycle peaks, the stock could potentially become undervalued relative to the company's long-term earning power. That appears to be part of Parker's argument. He believes the market may already be anticipating a significant amount of deterioration, meaning that the actual earnings decline may not be as damaging to the stock as many investors fear. In a cyclical business, expectations can matter just as much as the absolute level of earnings. Another important consideration is volatility. Parker said investors should manage their exposure to AI semiconductor stocks through broader diversification because volatility remains elevated. This is an important warning for investors who may be tempted to put too much capital into a small group of AI-related companies simply because the sector has performed strongly. Micron may have significant long-term opportunities, but that does not mean the stock will move higher in a straight line. Semiconductor stocks can experience major swings based on earnings expectations, interest rates, economic conditions, supply and demand changes, industry guidance, and investor sentiment. There is also an important market structure factor that investors should keep in mind. Micron's sizable weighting in certain semiconductor and technology ETFs means that significant inflows or outflows from these funds can contribute to buying or selling pressure in the stock. When investors allocate large amounts of capital into semiconductor-focused ETFs, the funds may need to purchase shares of their underlying holdings, potentially creating additional demand. Conversely, when investors pull money out of those ETFs, the funds may need to sell underlying positions, which can contribute to downward pressure. This means that Micron's stock movement is not always determined exclusively by company-specific fundamentals. Putting all of these factors together creates a very interesting setup for Micron. On one side, Citi is warning that the current memory upcycle could eventually slow, with DRAM and NAND pricing expected to peak in the second quarter of next year. Supply expansion and moderating pricing growth are legitimate risks, and investors should not ignore them. On the other side, Adam Parker believes Micron could potentially double by the end of the cycle because the market may already be pricing in too much future earnings deterioration. He is also highlighting the company's revenue outlook, high gross margins, improving balance sheet, and potential for substantial free cash flow over the coming years. For investors, the biggest takeaway may be that the Micron story is becoming more complicated than simply asking whether memory prices are going up or down. The more important question is what kind of company Micron will be when the current cycle eventually matures. If the company enters the next phase with stronger finances, substantial cash generation potential, high-value AI-related demand, and an improved competitive position, then a moderation in memory prices may not automatically mean that the long-term investment thesis has been destroyed. At the same time, investors need to remain realistic. A potential doubling of Micron stock is an optimistic scenario, not a guaranteed outcome. Memory cycles can change quickly, supply can increase faster than expected, pricing can weaken, and investor sentiment can shift dramatically. That is why diversification remains important, particularly when dealing with highly volatile AI and semiconductor stocks. The goal should not simply be to chase the strongest performing company in the market, but to understand both the opportunity and the risks before making an investment decision. Ultimately, Micron remains one of the most interesting companies to watch as the AI infrastructure boom continues to develop. The next several quarters could be particularly important because investors will be watching memory pricing, supply growth, margins, revenue, free cash flow, and management guidance very closely. If pricing remains stronger for longer than expected, Micron could benefit from another powerful period of earnings growth. If prices peak and begin moderating, investors will then focus on how well the company can protect margins, generate cash, and maintain its position in the increasingly important AI memory market. So while Citi's outlook suggests that the memory price boom may eventually begin to cool, the bigger picture is far from simple. The potential peak in memory prices does not necessarily mean the end of Micron's long-term opportunity. According to Adam Parker, the market may already be discounting too much future weakness, while Micron's improving balance sheet, strong margins, revenue outlook, and free cash flow potential could provide important support. At the same time, the elevated volatility of AI semiconductor stocks means investors should remain disciplined and diversified, rather than assuming that any stock will move higher in a straight line. The next phase of the Micron story could therefore come down to expectations. If investors expect a dramatic collapse in earnings and Micron delivers a much more resilient performance, the stock could potentially surprise on the upside. But if memory prices decline faster than expected and supply expands aggressively, the stock could face additional pressure. That balance between the bullish AI-driven demand story and the traditional cyclical risks of the memory industry is exactly what makes Micron such an important stock to watch. And that's the key story investors should keep in mind right now. Micron is operating at the intersection of two powerful forces: the cyclical memory industry and the secular growth of artificial intelligence. Citi is highlighting the possibility of slowing price growth and a potential memory price peak next year, while Adam Parker is taking a much more optimistic view of Micron's long-term potential. Whether the stock ultimately follows the bullish or cautious scenario will depend on how demand, supply, pricing, margins, cash flow, and investor expectations evolve over the next several quarters. If you found this analysis helpful, make sure to like this video, subscribe to the channel, and turn on the notification bell so you don't miss our next stock market update. Also, let me know in the comments what you think about Micron Technology. Do you believe MU has more upside ahead, or do you think the memory cycle is getting too close to its peak? Thanks for watching, and I'll see you in the next video.